It's not spoiling the party at the moment, but will it spoil the party, all those factors?
I think it depends really now what's going to happen in the meeting between Xi and Trump later this month in Argentina. And I think that will actually determine how the whole trade war will develop further. As it stands now, with just a 10% tariffs, with the devaluation of the RMB versus USD, this has been greatly absorbed by by China exporters towards the US. So far, we don't see any increase in insolvencies, be it frequency or in value.
Well, absolutely, because you look at it from this other angle, which is looking at credit, trade, insurance. You look at invoice leak times, and then ultimately, if people don't pay their bills here, and you look at accounts receivables. And how is the picture evolving, though? That's the point.
It's early days. What I'm concerned about, if the US will increase its tariffs to 25%, then I think a lot of companies in China will struggle.
So some things are already taxed at 25%.
Exactly, but it's quite limited for the moment. But if they go really on the whole export value of the Chinese economy, I think it will be very, very tough 2019 then for China.
Is it? So I guess to Richard's point, it's going to be a cash flow problem for a lot of these exporters, not being able to collect, not be able to pay, and that exacerbates the problem, doesn't it?
It's our concern on China would be specific on the exporters who export a lot to the USA. But also what you have a lot in, what the traders is more concerned about is the lurking dangers under the water. For example, listed companies today, they're very good, they have access to funding. But a lot of them, actually, their shareholders have given a pledge on their shares that they own towards the banks. Now, China has been in a bear market during the last year since the start of the trade war with the USA. So what might happen now is that banks will start to ask for more collateral or simply call in the loans, which actually might force immediate liquidity. Another concern that the traders has is US is very concerned about how China uses technology. With a company like ZTE, what we've seen early this year is when Chinese electronic manufacturers cannot access that technology, even they might be very strong state-owned background, they're really, in a couple of months, ZTE was on the verge of bankruptcy. So obviously for the whole Asia, because a lot of people will be supplying to them on open accounts, that could be a very big danger.
What about some people say this is a chance for the substitution effect, right, given these trade tensions. But for China, can they actually mitigate some of this with tax cuts, also a weaker renminbi?
Well, if they go to 25%, I think that's going to be hard. Obviously, at the start of the year, probably there will be some reduction in personal or social taxes that people have to pay. So obviously the government is trying to encourage domestic spending, which has reduced, actually, which is currently at its lowest level since the financial crisis. Another problem for China, obviously, the government is dealing with this debt bubble. So maybe also, there are ways to further stimulate the economy that might be quite difficult.
I was actually going to ask you that because you mentioned that some of the banks might call back some of these loans or collateral, almost like a margin call. All of these things go away if China basically orders the banks to lend money out. Which they have sort of.
It hasn't happened, though. The banks are still not lending.
Right.
Yeah.
For AAA cuts, we're not really seeing much evidence of their liquidity coming to the system. This is the issue, isn't it?
Exactly. And as soon as Mr. Goh said, ordered the banks to lend to private companies, the shares of the banks dropped quite sharply. So.
But the economic problem goes away. We pay for it, though, in 5 years. But now it's going to be fine and dandy. Is it?
If they start to loan, now it will be fine and dandy, but it might be really big issues down the track. So I think China will be disciplined because they need to tackle that debt bubble now.
But let's move away from China and have a look at some of the other countries which are looking at this trade war and looking at ASEAN in particular, who they know there could be winners out of this as people, of course, change their supply chains, and there could be losers as people get directly impacted by this because they're reliant on China. And let's not forget the Fed in all this too, ultimately too. Yeah.
I think really for Asia, the whole impact of the trade war will be quite limited. because most of the economy, even the emerging ones, are really quite strong. The discipline of the last couple of years has been there. There's quite some substantial buffers. Obviously, some of the markets have their weaknesses. But I think overall, the impact for emerging markets, Southeast Asia, I think it will be quite limited. And obviously, the domestic growth is so strong. So even if they export a bit less to the to China, then actually that domestic growth will cover that issue.